we're going to be fine. We're going to have a soft landing. We are way too big to fail. So just
Oh boy.
if you need to buy, call Jamie.
What's wrong with
If you
you?
need to sell, you call me. Just continue on.
You drinking this morning
I'm drinking my coffee.
already? What you got in there?
You gotta get up pretty early to be drunk by 9 a.m., boys. Hey everybody, Jason Barlow here with Sell for 1%. I'm
Who?
joined by my dad, Dave Barlow, my brother, Jamie Barlow, and my brother from another mother, Rich Sircone, Equitable Mortgage, with a weekly market update. The hell's going on out there, guys?
It's chaos.
Well,
Chaos.
as there's an old song from the 60s. Maybe it was Sonny and Cher. I'm not sure who, but
Oh
it was
boy.
called
The songs I missed in the pregame.
the Beat Goes On was the name of the song. And,
Oh, and the beat
and,
goes
uh,
on.
and the beat down goes on basically with
Oh
interest
boy.
rates. We are just not getting any positive traction in interest rates. We had the CPI number yesterday. It came in pretty much as expected. There's all kinds of elements of the CPI number. There's the core, and then there's the X food and energy, and then X food and energy and trade, and the 1 year look back, and also. But in general, it was pretty much as expected. A couple of those things were a little bit higher than expected. This morning we had producer price index (PPI). It came in again pretty much as expected, but there were some inflationary elements to the PPI. There were a couple of X food and energy or something like that. Those numbers that were a little bit higher. So the the news has brought the bond market is still not doing well. We were at 354 at one point on a 10-year treasury, 3.54. We're now at 4.45,
Oh
almost a
boy.
full point higher. And so if anybody wonders why are interest rates a point higher, they're a point higher because the 10-year treasury is a point higher. And that's where pretty much mortgage rates come from, is loosely based on that. So who knows what 25 brings us, the new administration. But for now, we've got to deal with high sixes, low sevens on fixed rates.
So even though the stock market's going crazy, the crypto market's going crazy, the bond market is lagging behind.
The bond market is correct. The bond market is not having a good day whatsoever again today.
Huh.
Mortgage-backed securities are not. I pretty much every day since September 17th, mortgage-backed securities have been negative. There's only been a handful of days when they weren't negative. So it's
So
a
they
real
just
thing,
they just lowered interest rates at the Fed.
right?
Uh, CPI, PPI. I guess when's the next unemployment? That comes what I guess
That comes the
first week of
first Friday
December.
in December. Yeah,
Yeah. Okay.
yeah,
So the last one was 12,000 jobs created or
yeah,
whatever it was, and that
yeah.
I think really put kind of a monkey wrench into what was happening with
Right.
interest rates because we were getting pretty close to down in the low sixes at that point, weren't we?
No, that timeline, when we had the 12,000 number, that was just a couple of weeks ago. And
Yeah.
we were already high sixes at that point.
He's
Okay.
talking about pre. I thought you were talking about pre Fed's first cut when everyone was
Yeah,
building up for this
right.
big rate cut, and it's like, and then all of a sudden it's not had a positive day since. Kind of crazy.
Correct. And again, this goes back to what we've said now for months. It's a forward looking situation. And so going into the September rate cut, everyone was forward looking and thinking that rates are going to go down and that mortgage rates were going down because of that expectation. But for whatever reason, when they lowered rates, the market is not convinced that this is a long-term policy with the Fed. They feel like the Fed is just trying to get their. They had so many rate increases over the last 2 years that they feel the Fed is just trying to get things back down to a more normal level and maybe undo some of those rate increases they did. But they don't feel like the Fed has has a mandate right now to really fight inflation and go after interest rates in 2025. And again, the other big thing I say is we do not have quantitative easing, which we had back throughout the 2010 to 2022 era.
Well, and again, with the stock market doing very, very well, it could be just as simple as people are pulling money out of the bonds, putting it into the stock market, and therefore the bond market has to push interest rates up higher in order to entice people to put their money into bonds.
Yes, it could be as simple as that. You are right, because historically it was always a lever that if
Right.
stocks went up, bonds had a bad day, bonds had a good day, stocks had a bad day. But for some reason, over the last 10 years, it's kind of been a level thing where like they're both going up together because the stocks like the idea of Fed stimulus, and of course, bonds like the idea of Fed stimulus. But there's been a disconnect again now, and it's a
Yeah.
more normal situation.
Yeah, it could be, as you've mentioned many times, is the quantitative easing of dumping crap loads of money into the
Yep.
market, basically at 0%. I mean, I can go borrow $1,000 at 0%. And of course, the number is much bigger when you get into those types of situations. But the example being, I can borrow $1,000 at 0%, put it into the stock market, make 10, 12, 15% on my money, go back and pay the $1,000 back, and I still have profit. That's a pretty good day.
Although I tried to do that a few times in my life, and it didn't work out quite that way.
Well, the problem is that you're borrowing the money from your wife's account, and that never works.
Yeah, that's
Well, the
that's
good
not a
news
good
is
day.
that they have the quantitative easing is not an experiment. It's tried and true, and it will work. We're going to be fine. We're going to have a soft landing. We are way too big to fail. So just
Oh boy,
if you need to buy, call Jamie.
what's wrong with
If you
you?
need to sell, you call me. Just continue on.
You drinking this morning
I'm drinking my coffee.
already? What you got in there?
You gotta get up pretty early to be drunk by 9 a.m., boys. So I did see a video the other day I thought was pretty interesting because I'm typically the alarmist, and and I do think that there could be a correction still. I don't think it's the end of the world like everybody else thinks, but I do see all kinds of things that are like, make me raise an eyebrow, like what you're talking about. Well, the bond market and the stock market are going up in parallel. That's not normal. But what happened? Oh, well, we greased the wheels of all the investors with, cheap money. It's like, oh, that can't be good. And the one thing though that kind of counters all that is this guy had this video. I'll put the link below in the description, a YouTube video, and it was like him going through the economy, and he was drawing parallels. And I believe in this part, which is that like we walk around thinking, oh my gosh, the crime is so high, we're unsafe. Well, that's because of the internet and the news. Actually, crime rates are down significantly from the 80s and the 90s. Like we're living in one of the best times of all time. But the doom and gloom is all these headlines. It was basically that with the economy. And this guy was going through the numbers like, yeah, there is all this negative. There are things that are there, but that it's going to probably just kind of continue on. Most people, if everybody thought like me, yeah, the sky would have fallen 10 years ago. We would have all cashed our money out of the banks and bought gold. But, most consumers don't think that way. And things are probably just going to kind of continue on and be the best of all time while you have prophets of doom yelling the sky's going to fall. It might fall. It might not fall. So you got to, pick a wagon and fully commit. But I would bank on America if I was you. I think that's a pretty safe bet that our dudes are smarter than the other dudes, but maybe I'm totally wrong. We'll all find out together as we end this experiment called quantitative easing.
So, Jay Marinsky on the buyer side, we're November 14th, last couple months of the year. This time of the year is typically a little bit slower as people getting ready for the holidays. We're headed towards Thanksgiving, which is late this year. And then, of course, Christmas into December. What are you seeing on the buyer side as far as activity? Are your buyers a little more, focused? Are they wanting to take some time off? What do you feel?
Interest rates
coming up a little bit here recently. I still think that I feel with my buyers, there's a little bit more activity than normal for this time of year, is what I'd say. Um, a little more buyers in the market since the, end of the election here recently. Um, but again, can still be, and as we've been saying for a few months now, buyers can still be a little more picky. There's more inventory out there on the market. So, um, you know, am seeing a lot more negotiations after inspections. Um, you know,
Yeah.
so the buyers are a little bit more picky, but there are a decent amount of buyers out there looking to buy at the moment, for this time of year in general.
Yeah, I think that there is a little pent up frustration. Rich, are you seeing any uptick on mortgage applications?
From my anecdotal situation where I'm sitting, I have been very busy over the last month. I have quite a bit of loans to get wrapped up before the end of the year right now. So my pipeline is fuller than normal. And the thing I am seeing, though, that people should take note of is that I'm not seeing unlimited appraisal gap. I'm not seeing
Right.
50,000 over asking price. So, yeah, rates are up a little bit, but hey, now, if you don't have to
Right.
pay 50,000 over ask and you can go in and get a house at the asking price and then refinance this higher rate somewhere down the road the next year or two, but you save 50,000, $75,000 on the buying the house because you weren't competing against all these people. That's a good deal. And I'm not seeing that in the contracts coming in. I'm seeing at asking price a little bit lower than asking price sometimes. I'm not seeing any discussion of appraisal gaps anymore. So, that, and as Jamie said, I'm seeing a lot of after the in contract, a lot of negotiations on the remedies. That's what I'm seeing mostly.
Yeah, we saw inspections kind of sneak back into the discussion starting about a year ago, maybe a little longer. And then remedies are now back in full force. And now we're also starting to see home warranties slip back into contracts. So buyers are feeling a little more powerful in their negotiations and not at the mercy of sellers. Jay, you do a lot of listings. What are you seeing out there? Is it kind of jive with what Rich and Jamie's thoughts are?
It's a weird market. I have some that still do go way over, but they're very few and far between. I'm not gonna, bullshit everybody, watching it. But every once in a while you get one that just, it rips and roars still. But for the most part, it's pretty touch and go. It's a lot of finessing, a lot of maneuvering, a lot of positioning, a lot of the stuff that we were doing, back in like 2016, before rates went to 3%. It's like so it's a weird market because again, sellers are getting top dollar. I haven't had well, I shouldn't say anyone, but for the most part, 99%, 95%, we're setting still all-time highs in the neighborhood. Prices are up over last year, which are up 20% over last year. Prices are still sky high. So sellers are doing okay. You got to have the right expectations. Don't expect it to sell in 3 hours. It may take, 2 or 3 weeks. And let's have a strategy and a game plan for that. So what you guys are talking about, I see people come in under asking, they want inspections. It's normal stuff, nothing that's crazy. Pendulum, is kind of coming more towards the middle. I would
Yeah.
agree with you guys.
All right. Good discussion, you guys. Thanks. A lot of good information in through there. Buyer, seller, or mortgages. If you need any help whatsoever getting a home sold, call Jay. Getting a home purchased, call Jamie. And the guy that can connect all the dots for you, Rich at Equitable Finance, will help get you financed and moved in the right direction. And with a ton of experience and a lot of good advice. So
Yep. And if you need to
appreciate it.
complain about me or Jamie, call Dad.
Yeah. Yeah. Send me an email and I'll get it sorted out for you right away. If you like this kind of information, please be sure to like and subscribe, hit that notification bell. And again, if you have any questions, please feel free to give us a call. Our contact information is here on screen, and we'd love to help get you from point A to point B and take care of everything all in between for you. Again, guys, thanks for getting up early here this morning. Jay, I know you got out of bed early. You're drinking lots of coffee there, so hopefully you'll wake up and be ready to go for the rest of the day. Thanks, guys. Have a
Really
good
good
day.
coffee.
Must be.